What is up, guys? Welcome back to Trading with Prince, and this is Prince. Happy New Year. Here we talk about institutional trading, smart money concepts, and BTMS. And today I'm going to be talking about a very simple strategy you could use to trade synthetic indices. Synthetic indices basically is only offered by Deriv, and to my greatest knowledge, yeah, they are the only ones that offer it right now. And if you don't have an account on Deriv, click the description below and create your account to start making your own money. So let's dive into what we have for today. Today I want to talk about a very simple strategy that just has to do with three things. You need to know the strategy, that's one. Secondly, it only applies in M5. Two, and you need to have an idea of order blocks. If you don't know what order blocks are, click the card above to get to my video where I talked about order blocks intensively. So let's talk about the strategy I have for you today. Guys, don't mind what I've been drawing in my okay, let's go straight to the point. Before we start this, let me point out something. The distance from here, let's get something right. Here, that's here to here. This is a whole 24 hours. This is a whole day. Likewise here, here, here. So we're going to be looking at it from that angle. Now, we're looking out for two things. One is something I call V and A formations. Let's look at this. You have a chart, and then this is what you're mostly going to be seeing in your chart. You're either going to be seeing an uptrend, consolidation, or a downtrend. Don't mind me, guys. I don't know what's wrong. A downtrend. So these are basically the three things you're going to be seeing in your chart. Now, just let's talk about this in this way. You have an uptrend. You have an uptrend forming an A formation. You know, an A goes like this and like this. This is just an A formation in a chart way. So basically, you're going to be seeing this, and then the next thing you're going to see is when it gets to the peak. This is what they call the peak formation. When it gets to the peak, it would reverse and break this last low here. When it breaks this last low here, you know that you have changed your direction. You're now on a low trend. This is on M5, guys. You're now going low, and then you're going to be looking for entries. This is where your knowledge of order blocks comes in, because you're going to be looking for entries to get all this money here. So how are you going to be doing that? With your knowledge of order block, you're going to search for, because it's a downtrend, so we're going to be looking out for a source which is definitely a source. Okay, let me recap a little bit, guys. A source is going to be responsible for this push down you have here, these lows you have here. Mostly a source is responsible for it, and you identify the source. The source is going to be a bullish candle, and you need to know the particular bullish candle that's responsible for your order block. If you haven't seen my video on how to identify fake and real order blocks, click the card above and you're going to watch it. So let's go back to what we're talking about. If this is a valid order block per se, the market is going to come back up here, retest this place, and go back down and keep going down. Probably retest another zone as well and keep going down, keep going down, keep going down till it reaches its lower peak formation and breaks again. And this is what the market keeps doing. This is what the market keeps doing. So you need to know how to catch either the upside or the downside. Let's go to the charts. So as I said, this is a day's chart, and as you can see, the market basically is on a downtrend right now. This is step index. The market was on a downtrend, and how did I know it was on a downtrend? As you can see, it was basically on a downtrend. It started with, the previous day was basically consolidations. I would really just call this corrections because the direction wasn't so clean. Then the market broke structure here. The market broke structure here. The first market structure was broken here. As you can see, the first market structure was broken here. Then it kept on going all the way down and came to the next day. As you can see, guys, in this part where it broke structure here, if you could notice, you can't really identify any other block. Why? Because it didn't go back to test any of these sources. It didn't go back to test any of this source. This one, 2, 3, 4. None of them were tested. So guys, I would always advise, even though you know the direction of the market, wait for your strategy to fall out very clearly, because if it doesn't fall out clearly, there could be a reverse and you won't really know why, because you just have to follow your strategy, guys. So guys, look at what happened here. Right here at this point, this is where this market had its peak formation. Remember what I talked about? I said when it goes all the way up and it starts reversing and it breaks the last low, this was the last low that it had here, and it breaks the last low here, this is the peak formation. And that what this means basically is that a new direction is about to start. It broke the market here. So that's basically what happens with that. Then, as I said initially, this only happens on M5. This happens on M5. You could check this on any of your charts. You're going to be seeing this. So there are only 3 things you need. You need to know where the direction of the market is at the moment. The direction, the daily direction of the market, the general direction for that day. Then you also need to know you need to have knowledge of other blocks to be able to enter the market. Then thirdly, you need to actually understand the general flow of the market at the moment. If the market is consolidating, I would advise you just let it be. But if the market is clearly showing that it's on an uptrend, giving you this is your A. As you can see, guys, this is like a strong A, and this is your V. So you just need to know what the market is doing and look for, when you find out the direction of the market, after finding out the direction of the market, the next thing you do is to find out where your other block is. You know, you need to look for your other block. With that, you get, if it's a bearish candle, if it's in a bearish trend, you look for the candle responsible for that flow. Let's go to the real-time example, for instance. So this day hasn't really ended. This is where today will end, as you can see. So what has it been doing? First of all, yesterday it was basically consolidating. Today it started with this, it went down, came here, and retested this place. This was the retest zone. This is our reset zone, and it started going up. We won't enter here. Why? Because there is really no bearish candle solid enough to be called an order block here. As I said, if you haven't seen my video on how to identify fake and real order blocks, you really need to go and see them so you know what I'm talking about. Then we are now waiting. Now we understand that the trend is basically an uptrend, so we're looking for breakers. We're looking for breakers. So we're looking for other blocks, and these are other blocks that are bearish candles that are responsible for the highs. So we keep waiting. Look at this. This is a very valid candle right here. As you can see, guys, you see this strategy is actually very simple if you actually take time and combine everything. If you look at this right here, take it up to the week. If you take it up to the week, you find out that let's be more precise. That's too much. The candle touched this wicks right here and started going up. Another place where you have a valid order block is here. Do you understand, guys? The first thing you do is understand the direction. This is like a V. This is a V now. This is not an A formation. This is a V formation. Understand the trend of the market. When you understand the trend of the market, you start looking for your OBs. When you get your OBs, you wait for it to retest your OB. As you can see here, The market came, went up, we tested our OB here and started shooting up again. And that's what keep doing. And this is live, guys. This is live. This is not history. This is actually what the market is doing right now. So that's that for that, guys. Let me just recap a little bit. This strategy mostly works or only works in M5. You need to identify your A formation or your V formation, and if you identify any of them, you look for your OBs, your order block. When you identify your order block, you wait for the market to go and retest your order block, and that will be your entry. Then you take your profit at the previous highest point where you could, people take their profit at different places, but I take my profit at the previous higher point, so it will be on the safe side. So you need to trade wisely, guys, no matter how smart you think you are, and trade what you see, guys. Okay, guys, that's it for today. Don't forget to like, subscribe, and push the notification bell. I'll see you in my next video.